Are you planning to renovate your spa location? That is wonderful. It will enhance the customer experience and increase revenue. However, there are some tax and accounting implications you might want to take into consideration. Improvements are typically considered capital expenditures because they extend the useful life of the asset. In this case, the building or the location where you have your spa business. These costs are capitalized on the balance sheet rather than taken as a whole on the income statement. They will reduce the income statement, but over time, through what is called depreciation due to the wear and tear of the asset, of the building. Why is this important for you to know? Because it is important for tax planning purposes. What will be the best time for you to take on this project? And what are the ins and outs that you need to know before engaging into this adventure? Consult with your tax professional. They are the experts to help you decide or to help you plan ahead and also show you the impact that it will have on your bottom line. Something very important that I always recommend is to keep very good track of the expenses you're incurring. Good documentation to support and to evidence those expenses are a major key player in this transaction because you will need them in case of a potential audit in the future, but also if you want to put up the building for sale in the future. If you want to know more, sit down with your tax professional or contact us. We're here to help you. Thank you for watching. Vanessa Hogan at Masterpiece Accounting Services.